Hello and welcome. I am Shantza Thomas of Thomas Tax Services and Aligned Ascent. Thomas Tax Services is all about bringing you tax expert advice, the best of the best to help you with either reducing your taxes so that you can keep more in your pocket or helping you to mitigate liabilities. Maybe you owe the IRS, maybe you have outstanding returns. Listen, we have advice and service and all of the things that you need to help navigate that space. So thank you for joining us. And for tax professionals, we have our Aligned Ascent platform, which is all about helping you take your business to the next level through tax. I am super excited that you are here to watch this video today. I just want to tell you one thing before you go. Make sure you like, you comment, you share, and at the end of the video, visit www.shantathomas.com where you can learn more about what it is that we do. Get into our world, get on our newsletter. You can even schedule an appointment if you need some help. I just want to say thank you so much again. On with the show. Today, I wanted to talk to you guys all about owing the IRS. And last week, I talked to you about tax planning. And when I discussed tax planning with you, I was sharing from the perspective of how bookkeeping is the number one thing that you need to make sure is in place before you do tax planning. Well, today I want to talk to you about owing the IRS, because this is also a key thing that is necessary to ensure that you're not doing before you start working or trying to do tax planning in your business or for yourself personally. So as you come in, say hello, let me know that you're here, let me know where you're from. And we're going to jump right into today's discussion. So why is it that you don't want to owe the IRS, and why is that such a big deal? Well, when it comes to owing the IRS, this is one of the things that we say is a key no-no in our firm. So when we're looking at working with people to do tax planning services, if they have a large outstanding tax bill, we're not going to work with them. Hi, Kamari. We're not going to work with them. And one of the reasons we don't work with people who have big outstanding tax debts or any sort of outstanding tax debt. And let me clarify, when I'm saying we don't want to work with you if you have an outstanding tax debt, what we mean is you have a debt that you have not put a plan in place to rectify. So it's not that you have a debt, right? You can have a debt. Hello, Arizona, Augusta, Georgia. So it's not that you can't have a debt. You can have an outstanding debt. Let's say you're in an installment agreement. So for those who don't know what that is, it's basically you owe a certain amount of money and the IRS says you're allowed to pay that money off over a specific period of time. They have different types of installment agreements that people can get into. A lot of what you hear about, a lot of people hear about is offer and compromises. So there could also be an offer and compromise, which is basically like I owe X amount. Let's say you owe $100,000. You say, I'm going to settle that with the IRS for $20,000. Those are very hard to come by. A lot of people don't get those. And you really got to show that you're broke, like beyond broke to get those offers and compromises. So they're not easy to come by. But if you are somebody who says, I have outstanding liability of X amount, I haven't addressed it, I'm not in an installment agreement, I'm not in an agreement with the IRS, I'm not in agreement with the state, anything like that, you don't want to do tax planning. And there are multiple reasons why you don't want to do tax planning in those kinds of situations. Number one, when it comes to outstanding tax debt, from the IRS's perspective, there are two pieces of this. So if you are somebody who has 2 years or more of outstanding tax returns, or if you owe the IRS and you have not paid it, you've been ignoring it. Maybe they're sending you letters. Maybe they have talked about levies. Maybe they have talked about other things and you have just been ignoring the letters, hoping it goes away. You need to understand, number one, it doesn't go away. It's not going to go away. And in fact, the longer you take to address it, the worse you're making the situation for yourself. Because the IRS, they're like, hey, we'll work with you. But if they feel like you're ignoring them, then they won't work with you. And if they choose not to work with you, now a bill that maybe you could have settled for X amount of dollars, you're going to end up having to settle for a whole lot more because they've added penalty and they've added interest. And it only takes so many years before the interest is the same amount as the penalty. And with penalty and interest, it has doubled what you initially owed. So it can go from a $20,000 bill to a $40,000 bill in like 7 years, something like that. 5 years, 7 years. It used to be shorter time frame, but it takes about 5-7 years for that to double. So now you got this big bill and the IRS is like, I'm not going to work with you on it. If you don't pay it, we will lever you. We will pull money out of your bank account. We will put a lien against your house so you can't sell your home. We will freeze all of your bank accounts. The IRS has all the control in these situations, all of the control. So if you don't have something in place to protect yourself, then you're at a disadvantage because the IRS is the IRS. They can do what they want. So one of the things we tell our clients is if they are interested in working with us to do tax planning services, we first have to address any outstanding debts or liabilities. We have to address that first. Them not doing it, maybe they are in an audit or getting ready to go into an audit. Now, if we just start doing all this, you owed 100,000, now you only owe 20,000. What do you think that's going to create in the what do you think that will create in the audit itself? It would actually create a worse situation for the client. So one of the things we make sure we do is we address any outstanding liabilities. And then once we address those liabilities, the second part of that is now you have to put something in place to make sure that doesn't happen again. So if someone came to me and said, in our example, I owe $100,000, and we're like, great, we can get you into some sort of installment agreement arrangement, or, there's a whole process that goes behind it, but we can help you to get this resolved. And we put them in a specific process. And then all of a sudden, after so many months, they're not making their quarterly tax payments. They're not continuing to file on time. They're not making their payments on time. Well, guess what? That takes you out of the installment agreement, and anything that's owed in addition, that gets added to the installment agreement. So the installment keeps getting bigger and bigger and bigger, and what you owe gets bigger and bigger and bigger. And you're going to be in this cycle of never being able to pay it off. And I will tell y'all, this doesn't just happen. I'm not just saying this today to people who are business owners who are not tax professionals or maybe dealing with something like this in their personal lives. I am also saying this to accounting and bookkeepers and tax professionals. You know why? Because a lot of us in this industry are owing a lot of money. How many of you have taken your business from wherever you started to you're making a lot more now? If that's you, say me in the comments. How many of you have grown how much you have made in your business? Many of us have grown how much we are making in our business. That's a great thing. But if we don't know how to then address and to stay in compliance in the business, then we are going to have a hard time making sure that we don't put ourselves in a position where we owe. And so I have talked to many accounting and tax professionals who are in the same boat as clients, owing a lot of money because they started making a lot of money in their businesses, but they didn't figure out how to make sure that they remain in compliance. And the same compliance that we would require of other businesses, other individuals, that same compliance as professionals, we have to make sure that we are also remaining in compliance. We have to make sure we're filing on time. We have to make sure that if we are an S Corp, that we are paying our payroll on time. We have to make sure that we're making our quarterly tax payments on time. We have to make sure that we're putting money aside for those things. We have to make sure that we're doing that. And the better you do that, the better you can show up for your clients. So for us, it's important to make sure that these things are a critical component of our business, because when we're working with clients who are business owners, in particular business owners, because a lot of times if you're a wage earner, you have money coming out of your check. And so that amount usually is pretty good in terms of making sure that what's needed covers what's needed by the end of the year. Where we often see an issue is business owners, because you have to make those payments yourself. So if you're a business owner, and as a business owner, you are finding that you're not making your quarterly tax payments, you're not doing those each quarter, or you're having issues with doing that, even though people look at tax planning, the reason why we call ourselves tax consultants or tax strategists is because we are strategizing and consulting you to make sure things like that don't occur. So we have to make sure the consulting piece or strategy piece is in place to make sure that you are staying compliant. But one of the very first things is making sure that you don't have outstanding liabilities. So if there are outstanding liabilities, we got to make sure we address those liabilities. We got to make sure we put a plan in place for them. And then we have to put a plan in place to make sure that you don't default again. You don't fall out of compliance again. Because falling out of compliance means will open you up to you are then opened up to a lot of risk. And in that risk, you don't want to take on additional tax planning strategies, because that could be additional risk depending on what you want to be involved with. So there are certain tax planning things which are not risky at all. And then there are other things which are. But if you're even doing something like retirement, if you want to set up a retirement, how many of you have a business that like, hey, I want to set up a SEP IRA. I want to set up a solo 401k. I want to set up some sort of retirement in my business to make sure I have money for when I retire. How many of you, if that's something you're interested in, or you want to make sure that you have some additional insurance for yourself in your business to make sure that you're covered in terms of insurance, or there might be some other fringe benefits that you might want to include in your business. If you want to include those things in your business, those things take discipline, they take organization, they take making payments at a specific periods of time throughout the year. And so if you can't figure out the tax piece, then it's going to be hard to get to those pieces. And if you can't figure all of these things out together to work together in a process for you and your clients, then what you're going to find is you're at some point going to fall out of compliance. And most of the time, people don't actually come to me or reach out to me because of compliance issues until they owe about $40,000. They owe about $40,000, and then they come to me and say, hey, I am in a bind. Can you help me get out of this bind? And yes, we can help you get out of the bind, but you got to make sure you address both things. What is it that you need to do historically to address whatever issue that occurred? What issue was occurring in the first place to get you in this place? And then what do we need to do going forward to make sure that issue doesn't continue to be an issue and you remain in compliance? So you don't fall out of whatever agreement that we agreed upon with the IRS, but at the same time, you can now start to build your wealth and your growth, and you can start to grow. And that's not just in a business, that's also personal wise. So you could be saying personally, in my personal life, yes, I want to save money on my taxes, but I also want to make sure that I'm not falling into a place where I owe the IRS. Or maybe I don't know, you could be doing whatever. Most of the time, again, I'm seeing that when it comes to businesses, or people will reduce how much their tax withholdings are each month, so they have more money, but then they don't have the money at the end of the year to pay whatever that difference is. If there's an outstanding balance, that amount will continue to multiply over years if you don't address it. The IRS is actively adding interest every single month. Think about it like a credit card. If you have a credit card that you don't pay, what happens? It goes into default. It could go into collections, right? IRS, same thing. If you have an outstanding balance you don't address, it defaults, it goes into collections. But here's the thing, where banks don't have as much leverage, IRS has all the leverage, which means the IRS can literally go into your bank account and get their money. The IRS literally can find out what assets you own and put a lien. So if you ever want to sell it, you're going to have to pay them first. The IRS can literally put a lien against a bank account so you can't touch any of the money in it. And they don't need your permission to do that. They don't need your permission to do that. Lysandra said every day is compounding. Yes. So the IRS is vicious. It compounds every single day. And so what you owed yesterday is less than what you owe today, is less than what you're going to owe tomorrow. It just keeps growing. And so a lot of times I had a client recently who said, I've been paying, and they were paying a lot. I've been paying all of this money towards an outstanding balance. I don't understand why it says I still owe the same, because you had all of this penalty and interest that had been assessed through the years that they had never addressed. And so when you were paying that, part of the money was going to the penalty, part of the money was going towards the interest. So it wasn't actually paying the total amount, the total balance off. It was paying it down some, but because you hadn't considered the penalty and interest, it's still, honestly, in their case, it was pretty much the same. So it requires you to address both sides. What is the outstanding balance? And what do I need to do to go forward to make sure that this doesn't happen again? Because as soon as it happens again, you have undone all the work that you did to put in some sort of agreement with the IRS to address it. So it's literally like starting all over. And whoever you paid to do the work, you will have to pay them again to do the work. So for professionals out there, we don't want to fall into these things, which are the very same things we're telling our clients not to fall into. If you don't know how to do tax, maybe you're a great bookkeeper, maybe you're a great accountant, but you're not really good at the tax side, then you need to hire somebody to do your tax stuff. That's the reality. If you're not good at the tax side, you need to hire somebody to do the tax stuff, because you can fall into the same space that anyone who is not a professional, a tax accounting professional, can fall into. And this is not a time to be embarrassed. This is not a time to be embarrassed. This is a time to do the work that you need to do to make sure that you don't keep falling into this pattern. It's not a time, but you need to address it and make sure you get it cleaned up. Because if you don't clean it up, it's just getting worse and worse by the day. Every day it's getting worse. Every day it's getting worse. So, hi, Alana. So for those of you, I see Heather's here, Christelle's here. We got a bunch of you are on today. So I'm saying all of this to say, if you are an accounting professional, a tax professional, if you are a business owner, if you are a wage earner, if you have a large outstanding tax liability, number one, the thing you do not want to do is just ignore it and just act like it doesn't exist. That's not going to help you get in a better place. You have got to address it, and you got to address it quickly. The quicker you address it, the better. In fact, if you address it before the IRS addresses it, that's the best. But you got to address it. You have to put a plan in place so it doesn't happen again. All of these things need to happen before you even talk about, I want to do a tax plan, I want to do anything else. You got to do that stuff first. So if you have multiple years of returns that have not been filed, more than 1 year is considered a tax resolution in our firm. If you have 1 year, which is your 2023, that you have to file, then that's a regular return. But if you have 2 years, you didn't file 22 and 23, or maybe you didn't file 20 and 23, I don't care what year it is. If you didn't file another year and you have 2023, number one, we have to go back to the oldest year first. Or at least that's how we handle it. We go to the oldest year first, we address that. And then we also look at what do we need to address now and going forward. But you need to make sure you're looking at both sides, because if you're not looking at both sides, then you might get into an agreement with the IRS. But then at the end of the day, that is going to just be undone as soon as you fall out of compliance again. So it's important that you do both sides of that. So I am really here to talk to you about understanding how you got to address that before you ever talk about doing any sort of tax planning or anything like that. But also, if you're in a place where you just feel like you're feeling very stressed, you feel like you can't sleep, you're getting liens, you're getting all those sorts of letters, then feel free to reach out to us to let us help you. This is not something that I'm only seeing happen with businesses and wage earners who are not tax professionals. I am seeing tax professionals have these very same issues. And so reach out to get the support that you need. I like to tell people, I am not like, bookkeeping is not my thing. I don't do bookkeeping. So if anyone comes to me to do bookkeeping, I usually have somebody on my team, somebody I'm working with, or I just all outsource it all together. Bookkeeping is not my focus. What I focus on is tax. So my goal actually for myself is to stop doing my own bookkeeping at some point and outsource it to a third party. That is my goal. By the end of the year, I'm hoping I can bring somebody on, or just outsource it to a third party so they can handle my bookkeeping. I don't want to do my bookkeeping. I am doing my bookkeeping every single week, every week. If you are in a growth phase in your business, you need to be looking at your numbers weekly, every week. You need to see what came in. You need to see what went out, because you need to make critical decisions within your business. And that is going to require staying on top of stuff. It can't be a matter of, oh, I'll look at it in 4 weeks. 4 weeks, so much has happened. And now we're moving into another month. If you have a business, especially if you have other team members in your business, you can't just make big shifts fast. It takes time. So if it's taking you time to make those shifts and make those changes in your business, you need to know what's going on right away. Someone said they had a client that didn't file their 2018, 2019, and 22. Keita said that. So Keita, what did you do in that case? I will tell you what a lot of professionals do. They say, oh, well, we'll file the 2018, 2019, 22. We'll file all those for you. And they'll just file them. That's the wrong path to take. What you actually want to do is you want to understand what all is going. You don't want to just file those returns, because there could be other things that are going on that you have no clue about. There could be other things that are going on with the account that you have no clue about. So you want to get the official transcripts from the IRS. You want to look at those things, find out what's going on with the account, any penalties, any interest, all that stuff that's happened. And then you also want to explain that to the clients. So I know that's one thing that I do. I sit down and I pull everything, and then I get a report. And then in that report, I go through everything line by line. I go through that report with the clients, and they always give me the feedback. Well, so far, they've always given me the feedback that, oh my gosh, I had no idea this was happening. They don't realize how much they don't realize the position that they're actually in. They don't realize everything that's going on. So they just thought like, oh, I owe $20,000 or whatever. No, they don't realize the bill is like 80,000, because 80,000, it's usually doubled. So like maybe 40,000 now, because there have been penalties, there's been interest. It's been growing every day for the last 7 years, and now they owe all this money. Someone said, how does it work when you have multiple years of not filing? You go back and do the first year not filed. Doesn't that trigger the IRS to look at you and cause issues? So that's a good question. If you have multiple years that haven't been filed as a business or individual, you still got to go back. Listen, the IRS sees and knows that you have not filed the years. So that will not in and of itself trigger an audit. I would tell you how I address them. If I have somebody who has multiple years, the first thing I do is I go to the oldest year first. I also determine whether or not it needs to be filed. So there's different information that you need to look at. Tax liabilities have different expiration dates. So you need to understand what the expiration date and whether or not that's a year that even needs to be filed. That's the first thing. Then you need to go back to the oldest year that has not expired, and you need to file that first. Why? Because there may be things in that year that could impact the next year. And so what you don't want to do is come from current time to back, and then now you got to do all these amendments. So I have my clients, we look at what things have expiration dates, which don't. Has anything expired? If nothing has expired, we start with the oldest year first. We do that year. We bring it forward every year. We file the returns. But even when you file those returns, you have to file them in a certain way. There's a whole process. This is known as tax resolution. So for anyone who's a professional on here that's listening to this today, or if you're watching on the replay, I highly encourage you to go get tax resolution training if you don't do tax resolution, because tax resolution is one of those things that you do not want to mess up. You don't want to mess up for your clients. And I had a client recently that came to me who was working with another professional who knows better than this, who was working with another professional, and that professional had them 3 years that they were working on this. And so their liability went from, at the time, maybe 30 something, 40. Yeah. It was about 20,000 to get started, right? It was about 20,000 getting started. Then over time, because there was some issues with the compliance. So they weren't doing the compliance things. Remember I said the compliance is just as important as the initial clearing things up. So they, number one, didn't clear up the initial stuff. But in addition to that, they weren't in compliance and they weren't helping their client get in compliance. So that bill went from $20,000 to $80,000 in 3 years. The client didn't understand why. They didn't understand about penalties and interest. They didn't understand what was going on. I sat down, I went through everything with them. We went through their transcripts. And once they understood what was going on, now we have a plan in place to rectify it. But we have to start with the oldest year, because just because you don't start with the oldest year does not mean the IRS is going to ignore it and say, oh, okay, well, they didn't start with the oldest year, we're just going to ignore the older years. Nah, soon as you file a return, that can also trigger an audit. So if you do a 23 and 20, 21, and 22 wasn't done, guess what? That's also going to trigger an audit. So that's why we address all of it. I call and represent the client. I call the IRS. I tell them what I'm doing. I ask them for a specific amount of time to work on everything, to get everything in place. And then by the time I'm calling the IRS back, I usually ask for 30 days. So in that 30 days, and by the time I'm calling them back, I am telling them, this is what my client has done. This is what we want to do to rectify the old stuff. This is what we're doing to stay in compliance going forward. So that's not necessarily going to just trigger an audit, because we've now cleared everything up for them. We don't wait for the IRS to tell us like, oh, well, you still have this outstanding. No, you want to address it right away. To not address it, I think is problematic, because the IRS is definitely then going to say, well, you addressed this year, but you didn't address these years. That's the problem. You always want to address it before the IRS addresses it. Keita said she did get the transcripts for those years. So I think that's great. So you do want to start with the transcripts, find out everything that's going on, and then you want to address it and you want to clean those things up based on that. Yes. So Christelle asked a great question. Do I work with bookkeepers to do tax for their clients? Absolutely. So if you have clients and you're like, I do the bookkeeping, but I don't do the tax resolution stuff, I don't do the tax planning stuff. Yes, we do work with bookkeepers. We work with other accountants to do this for their clients. We also work with people to do it in their own business, other accountants who all fall on the accounting side to do this in their own businesses. When we do work with you, if you are sending us someone, we do also have a referral process, a referral program. To get a referral, you can't just get, CPAs have this, but you can't just get a referral fee. So we look for you to do certain parts and aspects of the work, and therefore we give you a fee for that work that you will be doing. And that's how we work out the arrangements. So we expect you to do certain aspects, and then we will do other aspects. It just depends on how much of the work you are willing to do or wanting to do, to depend on what the payout is. But yes, we do those for other bookkeepers, and we do have a referral program. So if this is something that someone is interested in, feel free to inbox me. I'll be happy to assist you. Christelle says, I don't want to do taxes, but often come across potential clients that have not filed for years, looking for someone that is interested in working with them. Yes, we absolutely do that type of work. I prefer to work with those who have, so there's all types of tax resolution cases that you can do. I really like working with people who just have a few years that have not been filed. Some of them can get very, very complicated, very complex. I have professionals that I also connect with in the tax resolution space who handle some of the really complex ones. I send them to them depending on what it is. I handle certain ones. The ones that I will handle typically are someone has so many years they haven't filed. Maybe they did file certain years. Um, maybe they did file certain years, but they owe a big outstanding balance. And so we got to see, can we get an installment? Can we get an offer in compromise? That kind of stuff. So I handle that kind of stuff. Sometimes people have things like, I would say for the most, I'm trying to think of one like really complex. There are some like really, really complex ones. Oh, like I saw someone the other day. It was an accountant who was, there was a due diligence matter and they were being audited for their due diligence. I don't really do those type, so I would refer you. But if it's like outstanding years and stuff, absolutely, Christelle, that is stuff that we do. I would be happy to work with you and talk to you about that. And again, we do have a referral program. So basically, we give you a percentage of the engagement for doing X work, and then we do the other work, which is the representation part. We have a really good process. And so when we are working with clients, we get very good feedback. We make sure we try to be very thorough and educate the client on what's happening. What I don't like to see is for clients to come to me, we work on something, and then a year later, a few months later, they fall out of compliance. So we go over like, this is what you need to stay in compliance. And honestly, one of the reasons why I love clients come to me from other bookkeepers is because I refer them back to you, especially if they have a business, to say, hey, when we get done this engagement, I need you to be working with, in this case, Christelle. I need you to go back to Christelle, work with her to make sure that every month your profit and loss is getting done. No, you cannot do your profit and loss by yourself. Okay, that's how we got here. So let's not do that. I need you to work with Christelle so that she can do your profit and loss each month, and every quarter we need to make sure that you are filing your quarterly taxes. We can have discussions around what things you can put in place to reduce your taxes. We can look at all types of things that we can put in place that can help you build wealth and reduce taxes, right? So we can look at some tax strategy stuff, but you must also, and if y'all saw my live last week, you heard me talk about this, you must also be working with a professional bookkeeper to maintain your books. If their plan is to go back to doing their own books, you are not a good fit for our firm. Because number one, that's how you got in this situation. But number two, if you have not had professional training to do the bookkeeping, I can almost guarantee something's wrong. I can almost guarantee it. I can almost guarantee you got some assets in the profit and loss statement. When you purchase your desk, where did that desk go? Did it go on your profit and loss statement, or did it go on your balance sheet? Do you know what a balance sheet is? So bookkeeping is the core of any business. It's the foundation. So if you don't have solid bookkeeping, it's no reason to even do an installment agreement or an offer in compromise or anything. It's no reason to go into any of that stuff. Because once we do and we fix it, and then you have an issue again, something is off, the IRS is going to drop you out of what we did. And in many cases, and especially if you did an offer in compromise, that penalty and that interest and all that stuff is getting added back. So it's like we did nothing. So you just paid to have this done for no reason. So what we want to do is put you in the best possible place that we can put you into so that this doesn't occur again. So we need your help to do that. So anyone who's a bookkeeper that sends us somebody, we are going to refer them back to your company to do the bookkeeping going forward, because we have this discussion in our compliance meeting. Once everything is resolved, we talk about it from the beginning all the way through to the end. But in the end, we reiterate again how important the bookkeeping is. And if they're not working with a professional bookkeeper, they need to work with a professional bookkeeper. So we refer them back to the person who sent them to us. Or if that person doesn't want to do it, or they don't do it for whatever reason, or they just can't take on any clients or whatever the case is, then we will refer them to somebody else. But it isn't, we do have a compliance process that we work with the clients to put in place at the end of the cleanup of the tax issues. So once we get to the end and say, okay, now we have a resolve, there's been a resolution put in place with the IRS, with the state, whatever the case is, to resolve this issue, we put an additional compliance piece in place to make sure that this does not become a problem again. And that is very important. That is critical, because it will undo everything, all of the work that we've already done. So all my business owners in particular, I'm saying this. And the only reason, now I have wage earners who come to me too, but people who typically are on wages, again, most of them do not have outstanding liabilities like this unless they also have some sort of business, because usually their job does a good job of taking out the taxes needed to cover the liability for the year. So that's normally not a thing. It usually is only a thing when it comes to the income from the business, from a business. And that's not being handled properly. So it's very, very important to make sure that you are working with a professional bookkeeper. And it is very important that once we clean it up, you are working with a professional bookkeeper, somebody other than yourself, unless you have gone through school for it. And that's not like that's not like a knock against you for not being in this profession. It's like any other profession, right? You have certain doctors. I gave the example last week. I don't want my foot doctor doing brain surgery on me. I want the brain surgeon to do brain surgery on me. I want the foot doctor to do the foot, whatever, right? So when it comes to accounting and tax, you want to work with a bookkeeper. You don't want to try to do it by yourself, because that's the foundation. The tax prep comes from that. Your financial statements come from that. If you're trying to get a loan, that comes from the books. If you're trying to do tax planning, that comes from the books. If we're doing tax resolution and we're cleaning stuff up, that comes from the books. So if you have one thing that's wrong in the books, everything else that I just mentioned is all wrong. So it's very important for you to work with a professional bookkeeper. And at our company, if we're doing any sort of tax planning, it's required. If we do any resolution with you, we go over this and we connect you with the bookkeeper to maintain it going forward. Christelle says, do you do the books for those that are behind, or want the bookkeeper to get the books done and bring you the reports? That's a good question. So when we are taking on work, we can do, so that's called bookkeeping cleanup. So we can actually do the bookkeeping cleanup. A lot of times we include that fee in with the resolution fee. So if we say the resolution fee is X amount, we've already addressed the fact that your books are not done and we have to recreate books. And then after we recreate the books, then we can address the liability, because we got to do the books to find out what the liability is going to be. And then once we have the liability, if there's any returns that need to be filed, we then file those returns. And please note, I don't do all of this work on my own. I have team members that do it with me. I have other contractors that I contract with. These are people that I work with. I oversee everything to make sure it's all getting done. So we make sure we do this timely. Typically, if I'm calling the IRS for a client, I'm asking for 30 days. That's pretty much what they're going to give you anyway. So I'm usually asking for 30 days. They will usually give me 30 days. 30 days means there's a hold on that person's account, which means if they were about to put a lien, a levy, or whatever against the account, the client, if it was going into collections, whatever was happening with the client on the IRS side, they will give me 30 days to clean it up. 30 days. So imagine someone coming to me and say, I got 7 years of returns that I need to file. I have some book cleanup that has to happen. I got 30 days to do it. I am working with other people to make sure that it all gets done in time so that I can call back into the IRS and get everything rectified. But also know it's not going to be cheap, because that's a lot of work to do in 30 days. So if you have people like this, we absolutely would love to help you If you're a professional who has people like this who need support, we absolutely would love to help you and work with you. I normally would have a conversation with you first, find out, get some information about the client, and that sort of thing. And then I would usually get on a call with you. I am not afraid to work with other professionals to resolve issues for clients. Because in my tax planning responsibilities and my tax resolution responsibilities, there are other professionals. There are attorneys that get involved, CFPs that get involved, tax preparers, bookkeepers, CFOs for different companies. There are all these other people who get involved in the conversation. And honestly, that's the way it should be, because we're trying to figure out what is the best solution for the client. The only way to figure out what the best solution is for the client is to get everybody involved, make sure that there's no overlap, making sure that everyone is doing their specific role. So then I can effectively come in and handle my role. So if there are other professionals, we have no problem getting in and having a conversation with other professionals, because all of us have a specific role that we're handling, all for the betterment of the client. So it's not about just us. It takes more than us to do what's best for the client. And in a case where where a client may not have all of those specific roles in place, what we do is we come in and we will make a recommendation and say, well, here's an attorney that we've worked with before. They're a great attorney. This is what they specialize in, and this is how they can assist you. And then we bring on an attorney. Or if it's a bookkeeper, we bring on the bookkeeper. Whatever the case is, we would do that. But to answer your question, we will handle the bookkeeping in-house if you don't handle it. So if you already do bookkeeping, then we let you handle the bookkeeping. If you already do the cleanup, then we'll let you handle the cleanup. If you don't do the cleanup, then we will handle it in-house as part of the resolution. And so we build that price into the resolution. But we do like to make sure the clients are very clear in that we only have 30 days. So whatever it is, so if you want to move forward, then you have to be ready to get in there and do the work in 30 days. And sometimes it is very fast paced and it does feel overwhelming at times to clients, but we walk them through it all the way through, step by step. And depending on what type of work as a professional that you might be doing for the client, in addition to the resolution that we're doing, we may be meeting weekly. So I have some of my students who do planning have actually brought me resolution clients. And then what we do is we meet weekly to talk through the clients to make sure that everything's done in that 30 days. And then once everything is done, then we're done. The client is finished. Turn it back over to them. I wouldn't say turn back over because we work together the entire time, but they go back to the professional that brought them in and they continue the compliance work with that client. So that's kind of how it works. But yes, we can help on both sides. If they need bookkeeping and you don't do it in-house, we'll handle it. And it becomes part of the tax resolution. If you don't do it, if you do the work of bookkeeping and you want to take on the cleanup, then we will let you do the cleanup and then we will just do the representation part. So it really does depend. So I hope that was helpful. Great questions today. Thank you all who came on and had some great questions. If you are needing support, feel free to reach out to us. We will be happy to help you. You can also find me at www.shantathomas.com. And on there, you will see our book of services, including resolution services, where you can actually schedule an appointment with us so that you can meet with us and we can get you some assistance. Also, feel free to reach me on Facebook, Instagram, YouTube, wherever you are. Reach out to us. We'll be happy to assist you. This is both for professionals and for businesses and individuals who are needing assistance with resolution services or with planning services. But remember, if you are looking for planning services, you must be working with a professional bookkeeper. You must also not have any outstanding tax liabilities that you have not yet addressed. We can help you address those so that you can get in preparation in line to be able to take on the tax planning. But we got to make sure that we do the cleanup and we have a process in place for that. And we have compliance in place going forward. Then you're ready for tax planning. And you also want to make sure that you are working with a professional tax preparer. And we're going to talk about that when we come back next week. So thank you for joining me today. If you come in and watch this on a replay, make sure you let us know that you watch this on a replay. Ask your questions. We'll be happy to comment and leave you responses later. You all have an amazing day, and we will see you next week. Bye.